please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Lupin, that stock has actually been on the upside the last few days. We have Ramesh, CFO and ED of Lupin, who joins in now. Mr. Ramesh, thanks very much for joining in. Let's start with the rupee because that's really been the talking point of the last few days. And of course, today, what's the benefit that you see for your business? What is your earning sensitivity to the rupee?
Well, as you can very well imagine, exporters are certainly going to benefit a lot when the rupee depreciates. Well, whilst it could obviously be the opposite when it comes to importers. Lupin being being a net exporter from India, the rupee depreciation certainly helps us tremendously. It is also true that about 15% of our inputs are actually imported. To that extent, the inputs become a little more expensive. But being a net exporter, we tend to ignore that. We do believe that it's going to impact us positively. For every rupee depreciation, we could expect a profit of about 40 crores.
Right. So, Mr. Swaminathan, this would be 40 crores net addition flowing right through to the PAT?
At the PAT level, would go up by at least 40 crores.
Right. So, that is good to know. Is the worst in terms of price erosion in the US business behind us? What's your sense?
Price erosion has been a continuous phenomenon in this industry. This industry is all about a huge upside on launch and then a continuous downside. In the last several quarters, we have actually found that price erosion was higher than normal, principally because of external factors, which included consolidation of channel partners, the application of GDUFA, which brought in a lot more approvals, and that intensifies competition. But it's not merely us, it's also the competition is saying that the worst is behind us. We do believe that erosion has now been arrested at a single-digit number. It's about high single-digit numbers, really. So to that extent, things would only be looking better for all of us from here on. That's the good news.
Okay, Mr. Ramesh, the latest news on Lupin has been about an inspection at your Tarapur unit. I think you'd received one observation. What was the nature of this inspection, and could you tell us a little bit more about it?
So we believe, yes.
Mm-hmm. How much of an opportunity do you think Valsartan API will create for Lupin? And how do you think that will fill the gap with the global recall which is actually underway, which is taking place right now?
Yes, there is an opportunity which has been created for us, principally because one of those inputs which has been banned by, in fact, the FDA, it's not actually doesn't figure in our in our production process. There is, of course, a lot of movements from Valsartan to other sartans, but for sure we would be benefiting from this particular issue that has arisen with others.
Mr. Swaminathan, what could be the sort of size of the upside that we're talking about here?
It's not going to be a huge upside, but for sure there is an upside on this.
But could you put a number to it?
No, I wouldn't like to go into the details of that, not at this stage for sure.
Okay, there's been a recent acquisition, in the formulation space in the US, that was Oro acquiring Sandoz's derma and oral solids business. Is Lupin looking at any such moves to expand in the US?
Well, there are two parts to that. When it comes to, in fact, specialty business, we are, of course, on the prowl. As you would be aware, we are actually focusing on, in fact, the women's health part of, in fact, the specialty area. We made an acquisition in recent times, and that was Secnidazole. And we launched it, in fact, about a month ago. It's doing fairly well for us. We do believe that the specialty business is where we need to be growing, and to the extent we would be focusing our energies and efforts on trying to look at acquisitions there. That's for the short and medium term, before we, of course, direct a lot of our resources to developing our own products in that area. When it comes to generics, in a general sense, it's a question of we don't think we would be focusing our energies there because we do believe it's not going to add value from the portfolio perspective. Instead of, we would rather do it through the organic route. So the focus is only on M&A in the specialty space and not on the generics front.
Mr. Swaminathan, the company had guided that the second quarter will be pretty much the same levels as Q1. Could you tell us, is it panning out as per what you had expected? Could you also talk about how our key products such as Solosic, etc., doing in the US? And just give us some commentary in terms of how the rest of the year from here you see playing out.
So the first quarter, we actually closed about, we did about $170 million. But that is not, in fact, representative of what we could achieve during the course of the year itself. We do believe that the second half of the year will be much better than the first half, and there are good reasons for that. The first is essentially coming in from products that will be launching from our stable itself, which is levothyroxine and Ranexa. There is less competition on both, and to the extent we would certainly be able to benefit from that. The second reason, of course, is the ramp up on, in fact, secnidazole. It's already happening, and we do believe that it will come good, in fact, over time. For sure, there would be a lot more seen of it in the second half. And the third bit is essentially the flu season really clicks in, in the second half. And, and a lot of our products, which are in the cephalosporins range, would see, a pickup in demand. For those reasons, we do believe that, September to March would be, potentially better than the first half.
Mr. Swaminathan, but specifically, I asked you about Solosic. Could you provide us with how that product is doing?
So our first foray into, in fact, women's health was Methigene, but unfortunately went generic within a couple of years of, we making it a branded product. The second product that we have launched is essentially secnidazole, and it's doing very well. In fact, the prescriptions are at least 10 times more than what we actually anticipated. And there are some good reports coming in from investors also. So we do believe that over time it will ramp up perhaps to between $250 to $300 million, but that would be potentially over the next 2 to 3 years. So this is not going to be the only molecule that we're going to work on. We are obviously working on, in fact, a host of other molecules as well. And there are white spaces out there because you could see that Big Pharma is coming off women's health. So it gives us a good opportunity to get to, that space.
Okay, Mr. Ramesh, from the second half now, what is the expectation now from drugs like Tamiflu, levothyroxine, etc.?
Tamiflu would do well in the second half because it would be part of the flu season itself. And that, as I said, would, along with, in fact, other cephalosporins that we have. Secnidazole is ramping up. It's still early days, but, as I said, it's only going to peak in the next couple of years. But you would expect a decent number to come in the second half of the year.
Okay, what about levothyroxine then? You didn't tell me that.
Levothyroxine and Ranexa together, it would get us to where I said would be between $800 to $850 million as it so what it takes to get to that level.
Fair enough. Mr. Swaminathan, before we wrap up, just an overall margin guidance from you. In Q1, they fell to about the 13-14% levels. What is your guidance for the second quarter and FY19 now?
It's a question of perspectives because some had actually knocked off, in fact, the forex income and all of that, or in fact, anything which is another income. So the ways of looking at it, as far as we are concerned, it's part of operational income. And we had always said that the range for this year would be between 18 to 21%. And this is what we achieved in the first quarter, 18.9%. As you would recognize, this EBITDA is actually a function of three things: the kind of products that we bring to the market, the second, in terms of what do we do on the cost front, and thirdly, in terms of the R&D spends itself. R&D spends, we are fairly confident that we'd be able to keep it on a leash, and it would be around the 10-10.5% range. We're working, usually with consultants on, the cost front, and we're doing what it takes to kind of contain costs on several, across several lines. So on conversion in terms of yield, higher throughput to the same capacities, and of course working at, reducing of overheads across, looking at productivity of R&D and sales force. All of this will certainly yield good results during the over the next several quarters. And of course, we're launching good products as well. To begin with, it would be levothyroxine and Ranexa this year. But next year, we, for example, would be looking at ProAir from our inhalation stable. So there are good times to come over the next several quarters.
Right, Mr. Ramesh, thanks very much for that very optimistic commentary. So at least somebody is smiling about the rupee depreciation, if not, others. U.S. pricing pressure arrested, now down to single digits, so that's another positive. FTA woes getting resolved, faster than earlier, so that's also better. And the management of Lupin quite confident the second half of FY19 would be better than the first, so that's something